Hello there, Maverick Traders. This is Rob, and we are headed into monthly options expiration in July. So let's jump into it. In this session, we're going to go through what happened last week. We're going to go through the inflation reports. Then we're going to take a look at the market. We like to erase everything that we believed last week. We like to rescore everything. We're going to go through all the sectors, score them from +3 to -3. Then we're going to find some stocks to trade in those sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Let's first take a look at the news of last week. We did see equity markets make new all-time highs again. It seems like that is just a broken record where week after week it happens. But we've been talking about how it's been a very narrow rally. So for the last couple of weeks, we've been pointing out that there are like only 50% of stocks above a 50-day moving average. When the market's making new highs, that's just really a crazy number. And we've been pointing out that it was a very narrow rally. Well, we got a broadening of the rally for sure. And what happened on Thursday, we got this massive rotation where on a day where 75% of all stocks went higher, the S&P was down 1% and the NASDAQ was down 2%. That's bonkers. You are only going to see that a few times in your life. It was just showing you that how big these stocks have gotten. The Nvidias, the Microsofts, the Teslas, all of those, when they go down, it really takes the market down. That being said, for the first time in about a month and a half, we saw the underlying normal stock market, and we're going to take a look at some charts here. It finally burst higher and actually looks like it's getting a bid. We did hear from Chairman Powell this week. He said that there is no reason to wait until inflation gets to 2% before cutting rates. The bond market went down on that news. The dollar went down on that news, and the stock market loved that news. So ultimately, we are looking at about an 85% chance for a rate cut in the September FOMC meeting. The market really likes that. Let's go over this inflation report because this was the big one this week. Inflation was supposed to be cooling, but you can see that it's even weaker than expected. Negative 0.1% month over month. That is the first negative number we've had since COVID. And the core up 0.1% when it's supposed to be 0.2. Year over year inflation is still 3%. But look, these are really, really good numbers. And the markets really like this. On Friday, we ended up getting the PPI, which was abysmal. That is a hot number. That's not just a little hot. That's a lot hot. 0.4% on the headline, 0.2 on core. The futures kind of went down a tiny bit on this news, and then they completely ignored it. The market doesn't care about this news. They are focused on the CPI, and they've said, hey, we're going to stay in a good mood, and we're going to have a rally on Friday. Let's take a look at how the market closed up for the week. And again, these numbers are going to look a little weird. If we take a look at the Dow was up 1.8%. So the Dow had a big week. S&P, it was up 0.8%. Hey, that's a decent week. And the Qs were down for the week. And look at that difference between the Qs and the Russell. 6%. The Russell screamed higher. And like I said, we're going to take a look at some charts. I want to show you just how the average stock has been underperforming the headline numbers. Oil up a little bit, or down a little bit. Gold up a little bit. Not that big of a deal. But I really want to get into these two charts. And I showed these two charts on my Thursday end of day video. I want to show them again. This is the S&P. This is the S&P, and you can see that the S&P has simply been rising for the past month and a half. That's it. Look at that slope on this chart. This next chart is the exact same time frame. This is of the RSP. This is of the equal weighted S&P. And you can see during that time, the average stock has actually been lower. But you can see what has happened this last 2 days. We saw a huge burst to the upside, And we saw a little sell-off here in the headline, and this was mostly due to the large cap stocks. You know, the Amazons, the Microsofts, Nvidias. I do want to point out Friday's candle. And I want to really take a look at Friday's candle on the S&P, Friday's candle on the NASDAQ, and then I want to take a look at Friday's candle on things like the RSP and like the Russell. And we'll take a look at the Russell chart next. There was a little sell-off at the end of the day. There's no doubt about it. Little sell-off at the end of the day on Friday. But you can see that when we take a look at the S&P, okay, it lost about 2/3 of its gain. Look at the Qs, they lost about 3/4 of its gain. We take a look at the RSP, it loses about half of its gain. And if we take a look at the small caps, you can see that they held on to more than half of their gain. It's showing you that there is a rotation going on. And the big question, this is the big question that I think everyone should have in their mind, does this continue? My view is that this does continue. Lower interest rates is very helpful to things like the small cap stocks. Mid cap stocks do better with lower interest rates. Things like utilities and real estate do better in lower interest rate environments. This is most likely going to continue. The big question is, what happens to the large cap tech? Do they go up with the market? Do they flatten out and underperform, or do they actually go down? I think that is another question that we have to look at. So this week, I think we're going to see a continuing broadening of the rally. I think you want to be wary of the June winners. I think you want to be wary of the semiconductors, wary of some of the communication services stocks that have been super hot. I think you just want to be wary. I don't think they're going to crash because I think this market is still fairly strong, but I think you want to be a little bit wary. I think you want to be looking outside of those winners for any bullish trades. We're now getting it to the point. Remember where we've been. The first of this year, we had higher than expected inflation and a hotter than expected economy. Economic growth was just killing all the estimates and inflation was staying high. Over the last 2 months, we've seen economic growth slow down. We've seen it in the numbers. It's definitely been slowing down. The market has been cheering that because with that slowdown becomes a slowdown of inflation. And they really want that rate cut. Everything is Goldilocks at the moment. However, there is going to be a point where too much weakness in the economy is now a negative and stocks are going to go down because of it. When that point is, I don't know. It's crazy because over my 27 years, I've seen situations like this before where the market gets all this bad news, shakes it off, and then one day it gets more bad news and decides, oh, this is terrible. When it shook off all of the weak economic growth before that. I think we're in that period of time where the market is going to shake off any weakness until it gets too weak. And once it gets too weak, then all of a sudden, rate cuts are a bad thing. It means they're cutting rates because the economy is weakening. This is just something I wanted to bring up. I don't think it's going to be this week. We do have a retail sales report this week that I think is going to be important for people who are looking at that. But this is something I just want everyone to be aware of over the next month or two as we keep getting this economic data. If it gets too weak, at some point it's a problem. Right now, weak data is a good thing for the market. At some point, it will start to become a bad thing in the market. And it's weird because it doesn't make any sense when that switches. The market just figures it out by themselves. We are running into second quarter earnings, so over the next 3 weeks, we will have a ton of earnings reports out. Be looking on the calendar for any of the trades that you are making. This week, there's really only one thing I want to talk about on the calendar. That's retail sales. Here is the question. If this gets too weak, does the market freak out? If it gets too strong, the market's going to be very happy. The best thing that could happen for the market is inflation keeps falling, economic growth stays strong. This market will love that and just continue to chug higher. At this point, there's no reason at all to have any sort of downgrade. Even though we have a little bit of rotation going on, this market is still a +3 market. Let's take a look at the sectors because this week was a really interesting week for sectors. we saw a little bit of a change, and I think it needs to be put into your trading analysis.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
The best performing sectors for last week were real estate and utilities. This is directly tied to the fall in interest rates, very beneficial for these two sectors. Outside of that, you can see that we got healthcare, industrials, financials, and materials all up 2 to 3%, so much better than the rest of the market. Comm services and technology underperformed. Energy did not participate with the rest of the market in the rally. And I do want to talk about consumer because this has been my favorite sector at a +3. It wasn't up 2%, but remember the S&P was up 0.8 for the week. The fact that consumer not only matched the gains, but actually was a little bit stronger, tells me that the consumer sector is still in play. However, you have to take a look at tech and comm services underperforming the rest of the market. The question is, does that continue? Let's take a look at the sectors one by one, give them scores. All right, so utilities goes from a -1 to a +1. We're not going to go to +2 until we really get out of this range. It's hanging out around moving averages. Until we really get a trend, we're just going to stay in the -1 to +1 area. So utilities get a bump up a little bit. Here is comm services, was a +3. We're close enough to this 20-day moving average that I bumped it down to a +2. But this is what I was talking about. Look at this candle. Compare it to some of the other candles we see on Friday. You can see that comm services pretty much lost all of its gain that it had at one point on Friday. We come over here to real estate. Real estate gapped up, ran up, and it sold off a bit, but we still had a green candle. So real estate, it goes from a +1 to a +3. This is looking really good. There was a big explosion. Okay, there could be a little pullback, but I think you want to be long in the real estate sector. Moving on to healthcare, we go from a +1 to a +2. Healthcare has moved out of this range of resistance. So we're going to go ahead and bump that up to a +2. Moderately bullish on healthcare. Industrials, going to go from a -1 to a +1. Just like I talked about with utilities, until we really get outside of this area, we don't want to lean too far one way or the other. If it can add in a couple more green candles, we'll move to a +2, but for right now, just +1. Financials. Financials was a sector that was +1 last week, same thing. Look at this. We are now moving out of those moving averages in that area. We're going to bump this up to a +3. We got a 20-50 moving average cross, lots of momentum, and look at that candle on Friday. We did get some earnings this week. We got earnings from JP Morgan, and JP Morgan was down on Friday. We got earnings from Citigroup. Citigroup was down. The sector went up. So we had a couple of stocks, big stocks in the sector, go down on earnings, but people bought this sector anyway. That's a really good sign that there is money moving into the sector. Here we are in consumer, and I want to point out the candle on consumer. It held 2/3 of its gain, so it pretty much almost recovered everything it had lost on Thursday, and it held onto it. So we're going to keep that as a +3. Take a look at the candle on technology. We lost 2/3 of our rally, and we are still in the bottom half of that big red candle. We're going to go ahead and bump this down to a +2. So still bullish, but just not as bullish. We like things a little bit better. Finishing up with materials and energy, we've got materials went from a -3 to a +1. That's a big move, but nice candle on Friday as well. Then we come over here to energy, and you can see energy, yes, we did improve from a -1 to a 0. We're still just hanging out around these areas. So energy is at a solid 0. This is where we were last week. So we got a downgrade in technology and comm services to a +2. I would not be surprised at all if they go to a +1 this week. We got upgrades, real estate and financials. Take those places. Now we have the strongest sectors, consumer, real estate, and financials. And then pretty much everything else got an upgrade. As you can see, there is nothing bearish at the moment. Take a look at where we were. Just take a look at where we were at the start of the week. We had 4 sectors that were actually bearish. 2 sectors that were 0 to +1. By the end of it, you can see that we've got pretty much the entire market now rocking and rolling, and the only things moving down are tech and comm services. These are the only ones going left. Everything else is strengthening and going right. No reason at all to think there's any sort of real serious bearishness going on in this market. We take a look at our trade slots. The ones in red, they rolled off this last week. So we had some sideways stuff that rolled off. Nice trade in Marathon. Marathon and financials rolled off. Had a nice sideways on materials, but it ended up having a big run on Friday, so that was a loss. Everything else was a gain. So let's take a look and see where we are right now. We already determined we are at a +3 market. Our +3 allocation, up to 15 trades. These are the slots that we can fill right here, right now. This is where we are. This week, I'm going to be adding to real estate. I like this real estate sector. It's strengthened quite a bit. I'm also going to be adding to the industrial sector that is strengthened. And then I don't want to get too overly bullish here. As you can see, we're leaning nicely to the bull side. So I'm going to go ahead and add in a +1 to materials and just a 0 to energy. And you can see I am less bearish this week than I was last week. Even though we got that big rotation on Thursday, I really like what's happening to the underlying market, to all the stocks underneath that hasn't been performing. I think they're going to start getting a nice bid. So let's go ahead and take a look at those 4 potential trades in those sectors. In real estate, we're looking for a +3. Remember, +3s are you want to find something that's got strength, not something that is already run and is likely tired, but something that is probably going to have a very big explosive move. And I came across this one, AGNC is the ticker symbol, and take a look at this base. This base goes all the way back to December, and we are now breaking out of this base. This is a 7-month base, and we're breaking out all during a time. Again, this is a mortgage company where mortgage lending is likely going to start picking up again. It's just a very, very nice chart here for a potential longer-term move. We're looking for a +3 trade, so this is going to be the trade. I'm looking at the 10-11.50 bull call spread. We're asking this stock to go up about 10% or more. 10% or more. That is a big jump, but we are at +3. There's other ways to play this. You could be just barely a little bit bullish to neutral, be slightly bullish. There's lots of ways to play this one. AGNC on the long side. Next up, we wanted to add a +2 to industrials. Again, same thing. I'm looking for something that has some power behind it. Something that has consolidated for a while and likely to have a run over the next couple of weeks. I came across 2 stocks in this industry group that I really liked. I liked Aramark Holdings, ARMK, and I liked OTIS. Sadly, both of these stocks only have monthly options. And I was looking elsewhere and I couldn't really find anything, so I had to go with one of these. Let me tell you how I'm going to play it. Here we are on Otis. We're right up against 100. We might break through this week. We might actually hold here. Maybe we back and fill a little bit. Maybe we hang out here. Maybe there's one more time down to this average before we break out. That's what ascending triangles do. I don't want to make a trade for this week because that's just not enough time. We're right at resistance. But I want to do a bullish trade, a +2, but I also don't want to go out for 6 weeks. So actually, this is going to be 5 weeks, all the way out to August. So I thought, hey, why don't we do something a little bit more in the middle? I'm going to do a diagonal call spread for this week. So this week, I'm going to sell that 100. That 100 has about $1 in premium on it. So I'm going to buy the August 95. I'm going to sell the 100. And if this thing hangs out here, I'm golden. This is going to be perfect for this because it's going to expire. That 100 will expire. I'll keep that credit. And then I'm going to adjust to a 95 102.50 bull call next week. That's going to be more of a +2 trade. If it takes off and runs this week, then I will actually just close down this whole position, take my small gain, and I will find another industrial stock next week to fill that slot with. OTIS in industrials. Materials, I'm looking to be at a +1. Again, looking for something +1. I don't need something that has a ton of energy that's been basing forever. I just need something that's not going to go down. Came across DuPont DD. You can see it just has had this nice lazy downtrend after a big uptrend. You could call this a flag pattern for sure. What we like to do is we like to enter it. It breaks out above the top of this line. You can see it broke out. I don't see this thing having a ton of momentum. I think we're going to creep our way up to that 82. At a +1, I'm looking just to play it fairly neutral. I'm looking at the July 26, 79.81 bull call spread. Again, we're looking for right here. As long as it trades and holds above 81 in 2 weeks, this is going to be a max gain for us. If you want to be a little bit more directional, then an 80.83 is going to be the play where it does need to run and break out to a new high. So give it a little bit more time, another week at August 2nd. And last, we're looking at a sideways in energy. Looking at HES, HES, and you can see that we are just down here at a support point. It looks like the energy stocks have bottomed. We're actually starting to get a little bit of a move higher, but this one is just not wanting to participate. If you take a look inside the energy sector, you'll see there's some things that are really bullish and making good moves. But this one here, really just hanging out. And I'm very confident that we're just going to be hanging out in this area. This is where I want to make a sideways trade on HES. If we're looking at something really short term, which I'm not going to be, but if someone said, Rob, I want something this week, I actually do think you want to be slightly bullish this week. I think this rotation continues. I could see this moving a little bit higher, so just a targeted butterfly at the 147, 150, 153. So you can see we need a slight move higher up into that 150 area. If you're willing to go out another week, which is what the trade I'm looking at making, really the 145, 150, 155, we're pretty close to in the middle. This is not going to be all that targeted. This is going to be much more theta than a targeted butterfly. There's lots of other good sideways stuff in energy. You can absolutely go into that sector and find something else. And speaking of other trades, if you want to share other trades with the rest of the Maverick group, log on to the members area, go inside, jump on that forum, and let's get that discussion going. Wrapping this up, the big question in my mind, and I think it should be the big question in everyone's mind, we have clearly seen the narrow rally higher, and we pointed out over and over again the advanced decline line. We would point out that there is only 50% of stocks above their 50-day moving average. That has changed. We're now about 68% of stocks above the 50-day moving average. Last week it was 50% above. Now you can see how many stocks are now starting to trade above their 50-day moving average, which is our definition of a trend and a bullish area. I think it makes sense to be wary of the leaders. I don't think you have to be scared if you have positions in Microsoft, in Meta. If you have positions in those, I definitely wouldn't bail on them because I do think this market strength is likely just going to hold them up. Remember, a lot of people now invest in the market and trade the market just by buying the ETFs. The fact that they're buying the Qs, the fact that they're buying, the semiconductor ETF, that's going to hold up all of those stocks in those sectors. I think we're going to get enough money into this market, and enough of it is going to be going into indices and ETFs, that it just holds up everything. But it would not surprise me at all if, the market goes up another 3 or 4% and these things are flat. Would not surprise me at all. I think you want to be in the things that have underperformed, that have really started to show some leadership. Other than that, it's going to be some pretty typical summer trading, which is a grind higher with a couple scary days of red candles, and then a recovery and grind higher again. Expect that through the rest of the summer. Thanks for joining me. Everyone have a great weekend. Goodbye, everybody.